Gold last week traded with a modest bullishness and in fact has seen highs at 1973 but failed to, you can see the bulls were not up to the mark. In fact, it did not even achieve the previous highs at 1985. At the same time, most important part is the levels it respected 1940, given it a very good support, and we have discussed this multiple times in our daily and weekly analysis that 1940 levels are certainly a very good resistance and my favorite number. You can see now the 20 period moving average is simple and exponential also sitting at the same levels. So now what to expect next week, whether it is going to fly high from here or we can see a drop again. Which position you should take trading gold next week, we will see with the help of charts followed with indicators, and towards the end we will summarize and give you the trading levels and strategy. Do watch till the end. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the twice a day targets which I share for gold, first with the Asia session, next with the US session. 2 times I update the gold's target and position. So do watch that also. Also, you can remain updated by joining our free Telegram channel. The link is mentioned in the channel and video description. Let's start. First, let's have a look at the candle. And if you look at the candlestick charts on the weekly charts, you will find, see triple bottom. Since the triple bottom is done, gold has achieved the highs of this channel, retracement to the lows of this channel, then achieve the highs of this channel, and then the retracement now to the bottom of the channel. Now see, this is the second wave here. First wave we have seen this one, second wave we have seen this one. Now does it mean that it has seen the bottom and it is going to stay above these levels and it is going to fly high? That is one point only possible if it breaks past 1985. You can expect that possibly beyond that we may see certainly 2000 and 2020 levels for sure. Now that is one point, that if it stays above 1985-86 zone, which for last 2 weeks we have seen it giving very good resistance on the upside. That is the first point. Next point, if you observe the candle, see, higher lows are seen. It means on the downside, certainly a very good support is seen and lower highs are seen. So at the same time, the resistance there on the upside. Now this is a consolidation zone. Though the candle closed in green, but this is still in consolidation. We have not seen the bulls taking the price on the upside. At the same time, neither the bears has the strength to take it further down. But one thing is very clear, it is in a precisely in between 1940 and 85. We have to exercise extra caution while trading gold. Now what could happen possibly is once it breaks out beyond this zone at 1970-75, you can say that it has taken a direction and it may try to give it a very good bullish move. So breaking beyond 1985, then you can confirm that the bulls are back and we are going to look forward to a rise. Remember this week the CPI inflation data, the PPI inflation data and the Fed interest rate hike decision, at the same time the projections for the forthcoming quarters are going to drive the markets, and gold is no exception. Definitely this will bring volatility to the price, and hence now if you see it trading above this zone, first of all you can stay long. If it opens above 1960 to 63, you can stay long and expect it to rise. First target is for it to hit above 1970 levels and then 85. If these two are taken, if 1985-86 is broken, you can expect that it is going to give it a very good bullish candle. But this is the case only if it breaks beyond 1985. Now on the downside, only bearishness is if it trades below 1940. That is for sure, because below 1940 we can expect it to drop heavily. And how far it can drop? It can drop till towards 1915, 1900 and 1870 levels. Yes, it can stretch till there. See, couple of red candles, couple of retracement candles, and a break on the downside certainly gonna bring more bearishness. Now this is on the weekly charts. Let's have a look at the daily chart. Similar is the observation on the daily chart. See, rise, consolidation, retracement. Now most important point here to note is the support it has formed at 1940. This is a great support it has formed. Multiple candles. See here, it has got support, retracement, again drop, and again getting the support at the same level. This is the most important point to note. Hence any drop below 1940 certainly will bring more bearishness, specifically if 1930 has taken. Certainly 1950, 1900, 1870 levels, it can stretch the drop till towards those levels. Remember, the on the upside, one point to note here is, see the drop there, you can see highs are getting lower with every candle, and that is where I am exercising extra caution. Despite having a strong base on the downside, the highs are getting lower with every candle. And this suggests that certainly there is an indication of, you can say, the bulls are not there, the prices are not willing to stay up. That is one indication I am getting. Second is certainly the base is there very strong. Now look at the last two candles. Last two candles, one complete bullish engulfing we can see. You can see one red candle followed with a green candle, and this green candle completely engulfed the previous candle. Now last candle, if you look at, higher highs and a little drop, and candle closed in green. So if it opens in green, if it stays above 1966-67, you can possibly expect 1975-85. And once it stays above 85, you can expect that the gold is trying to break, and with the CPI data and PPI data, we may see it flying high at the first part. Next, if it opens below, trades below 1954 levels, that is the level below which little more bearishness can be expected, 1950, 45 and 40. So you can sell there at 1954. However, one has to remain extra cautious till towards 1940 levels, because till the time 1940 is respected, do not consider this as bearish. Now look at the monthly. Now specifically monthly charts, higher lows, higher highs were seen for last three candles. Then lower lows are also seen. And if you look at the charts here, even if it tries to drop on the downside, 1915 levels are certainly 15, 1915, 1920 levels are certainly a greater support here. Now what has happened so far is higher lows are done. What has happened so far is the candle is still in red, and it is trying to keep the prices down. At the same time, it has formed a tail, which means that there is a possibility that it can try to stress the rise, and it can continue with the upward momentum from here. There is very strong probability of this. Why? Because see, there is a base which is formed at 1800 levels for 3 consecutive months, 3 candles getting the support at 1810, 1820. With that as support, we have seen this rise, and now it is trying to trade in this bullish channel. The bottom is done. Now on the upside, anyway, the sky is the limit. And because see, first of all, one must note that gold has been trading with this bottom channel, bottom as a support, and since then it has seen this high. This is a bullish flag formation on the monthly chart. And if you look at the formation, see the pole here. Now it was trading with this flag. This time it has breached this flag, and it is willing to break out, and hence, yes, staying above 20 levels, it is going to break past 2100 also this time. Please note that fact. At the same time, if you look at another perspective, the another view here is the triple top. It is seen here. First this rise, the retracement, then double top, lower lows, then this time. So certainly it has breached this formation, and it is trying to trade upside. So I'll wait for it to break past the previous highs, then certainly more bullishness can be expected. Now look at the indicator. If you look at the indicators on the monthly chart, the previous three candles traded outside Bollinger Bands, and whenever we see it trading outside Bollinger Bands, we can see there is a pullback, and that is what has happened in the last 2 to 3 candles. Now the Bollinger Band width has expanded, now situated at around 2050 levels, and yes, it can give you a breakout also. Do not think that it has turned bearish. At the same time, one observation to note here is the moving average on the monthly charts. All the moving average trading with divergence, trading bullish. Now support levels is seen far below at 1840 levels. Now why this could happen? See, the prices were divergent from the moving average, and then we have seen them converging, taking the support from the moving average and then rising here. Now here too the prices diverge from the moving average, and then we have seen a conversion. Now here too the prices diverge from the moving average. The moving average is though looking upwards now, still the prices are far above from the moving averages, and hence the chances of conversion is also there below 1870, below first of all 1915, 1915 levels. If it breaches, then you can say that it is definitely going to give you a very good break in the month of June. Now look at directional movement. This is bullish here, divergent. Stochastic was trading overbought. It has dropped a bit in last couple of months. And if you look at the MACD, now look at MACD, it is still trading divergent, it is still trading bullish, it is still looking upwards, but the candle size have flattened. That is the one concern point. Also remember, it is preceded with a sharp bearish move there, and now it is trying to recover. Hence I will definitely watch out for if it continues to diverge. RSI trading flat here, and on the week, now on the weekly chart through, see the prices diverge from the moving average. It is converge here, the divergent, the conversion here. Now the point here is the moving average itself had a very small divergence there. Now the moving averages are trading with extreme divergence, and hence possibility for it to converge exists, which means more bearishness. At the same time, say the moving averages have flattened here. So this is the point which one should note, because below 1940 levels, there is a possibility that it can try to hit till towards 50 period moving average situated at around 1870, 1880 levels. So one has to remain definitely caution here. Breaking below this channel certainly will bring more bear. Also, if you look at the Bollinger bandwidths have expanded, now it is sitting close to 2080 levels. The directional movement is still bullish. It was trading with divergence, now has converged a bit, however not yet crossed over. On the weekly chart, the stochastic has come to oversold levels. This is something one should note here. And from oversold levels, a possible recovery can be expected. Now if it is bullish, it can just touch here oversold levels and recover completely on a V shape, because right now whenever you see in the near past, whenever gold has seen an oversold levels on the weekly charts, it has come back with a strong bullish move or a retracement. Now look at MACD here on the weekly. Now look at the weekly chart. See, there was a strong bull run so far, and the MACD has crossed over a couple of weeks back. It has traded with divergence so far, but with the last two candles, you can see the divergence is almost flattened. So I'll wait for it to converge crossover. If it does, then it can try to achieve further high. See, this is still at a higher levels because minus 50 to plus 50 move is done, but at the same time on the upside, it has still got some scope for it to continue with the upward movement. If it crosses over beyond plus 50 levels, certainly more bullishness can be seen there. RSI here has dropped and now trading comfortable. And if you look at the daily, now look at the daily charts here, the 20 and 50 period moving averages. This is exponential moving average crossover. This is a bearish sign here, trading with very little divergence. At the same time, this is the simple moving average crossover 20 and 50 period. This is also bearish sign. Now prices are very much limited within this zone itself, and you can see the simple and exponential moving averages both trying to give it a very good support and resistance on the upside and downside. Now if you look at the movement here, see these were divergent here. Now the 20 period moving average have started to flatten, so possibly a conversion and crossover will bring more bullishness there certainly. And on the downside, the support there from the 100 period average at 1945 levels is very strong. Look at directional movement. This is bearish. Stochastic is almost flat, neither bullish nor bearish. The MACD on the daily charts have just crossed over, trading with divergence, looking bullish, and this crossover is happening at a slightly lower levels. See, when it is bullish, it has seen the extreme highs, but while it is on the sell side, it is still getting the support on the downside, and hence from here the recovery can be expected. Now look at the movement there. See, one drop, retracement, second drop, retracement. So this is the second leg, and it is not yet given a complete sign of a reversal. Hence, beyond 1985, certainly more bullishness may prevail, which can take it to 2000 and 2020 levels. Now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for. And before we proceed, if you want to learn this art of trading profitably, if you want to learn all the tools, techniques, and strategy which can help you become a profitable and independent trader, reach out to me. My Telegram and email IDs are mentioned in the channel and video description. My 23rd batch going to start on 1st of July, and seats are only reserved based on first come first serve basis, and hence reserve your seats now itself. Reach out to me for more details. Also, you can be part of my signals channel where trading as per the signals. Definitely you can benefit. Now first, where to buy? Only buy entry 1967 levels, where you can expect 1975, 1984 levels. And if it does, see 1984, 86, I will say this is going to be a tough nut for gold to crack and pass by. If it breaks beyond 1986 levels, we can see it hitting. See, beyond that, certainly we may see it hitting 2000 levels, and in fact, beyond that, we can expect it to hit 2020 levels. Now, beyond 2000, certainly more bullishness is going to prevail here. Hence, one has to just watch out for how it behaves at 1984-86 zone. Beyond that, certainly more bullishness is going to be seen. On the down, where to sell? I will recommend you to sell here at 1954. But remember 1950, 1945, 1940. Till here, it has got extremely good support. Remember, it has to sustain below 1940 levels in order to trade bearish. This time below 1940, you can still expect a first support at 1932, which is the previous lows, which is we had seen last few days. And below 1932, we are going to look at 1915, 1900, 1870 levels. Only and only if it draws on the downside, we can see extreme bearishness. Hence, till 1932, do not consider this as bearish. On the upside, beyond 2020, we are going to look at 2050 levels. In between this, there is 2036 and then 2050 levels to be achieved. And this is going to happen in a rapid pace if it breaks beyond 1986 levels. Certainly, twice and thrice it is attempted. If third time it attempts, certainly it is going to break pass by. So take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe, and comment. Join my mentorship batch, join my signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.